makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump is pushing forward with his aggressive tariff regime, stressing that he will not offer additional extensions on country-specific levies set to now hit in August the 1st. Now, he's also indicating that he could announce substantial new tariffs on imports of copper and pharmaceuticals.
I believe the tariff on copper, we're going to make it 50%. We'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%.
Well, Trump's comments led to a record spike in U.S. copper futures, sowing chaos in markets for the metal. Now, for more, let's bring Christian Keller, head of economic research at Barclays, Brendan Murray, our trade czar, and Richard Bravo, our European government editor. Brendan, let's start with you as always. I mean, we thought that we could look through this almost, right, that there was time to negotiate, and then suddenly the temperature really changed from the U.S.
Yeah, exactly. So the Trump administration has a problem with all these trade negotiations that are going on around the world. Many of them are not coming together by the initial deadline that the Trump administration had thought they would. So what we're hearing is pretty much a classic Donald Trump move. He's threatening these sectoral tariffs, which not only hit the countries that export copper to the U.S., but remember, they can use these tariffs to apply to derivative products of copper. So it's not just the raw material; it's various products that could have copper contained in them. The other issue that this could play into is the upcoming USMCA review. Canada and Mexico are not small suppliers of copper to the U.S. So this could play into the broader sort of trade schematic that the Trump administration has out there, including the talks with Canada. Mexico.
Brendan, why the change of heart? Again, I mean, we were here yesterday. Traders initially shrugged off these series of letters, because he pushed back the deadline. And now he seems like he means business and he's not backing down.
Exactly. He's trying to get the attention of countries like India, economy like the European Union. Pharmaceuticals mean a lot to both of those economies. So he's reminding them that he has this other tool that they can hit them with.
This is a concern, Christian. I guess, from an economics point of view, you're always a little bit uncertain where you stand. Because yesterday you had a plan and it took time and it seemed that he wanted to protect the economy. Today, again, we're unclear on where this goes.
Yeah, I mean, it's very interesting. The markets, in a whole, they seem to have grown somewhat numb. We see certain sectors like copper certainly is reacting when news like this comes out, but overall, S&P 500 is reacting relatively calmly. So I think there's a certain, getting used to this type of politics, and people probably still believe, even the 1st of August, there could be some extension, some negotiations. Now, there's a Trump administration, there's the market, and then there's the economy. And I think what keeps everything calm at the moment that is so far, economic data just has not been showing any of the negative effects of all this uncertainty they've been talking about.
But Christian, I mean, again, copper, we're, kind of joking around about where the big mines are in the world. I mean, copper could change everything, right? I mean, we use it in our tablets. We use it for, some of the new technology for renewables. Could it actually prove recessionary, or does inflation, shoot straight up in the U.S.?
Copper, as you say, goes in everywhere. Steel and aluminum goes into everything, and so these things we are convinced that it will show up. And there are certain lags, and maybe economists have not been very good in calling them. So far, U.S. inflation has been coming down rather than going up, but we think in coming months it will go up. And when you see these effects, I think then they can no longer be ignored. And I think this is why there's a risk to markets in the next few months once you see these effects.
Brendan, do we know actually what the president wants? So again, I mean, I know we always go back to this question, but because it's a little bit volatile, I mean, does he want, he wants a strong economy. Does he worry about inflation, or is he just blaming it on Powell so he can do what he wants with inflation?
What he wants is more production in the U.S. This has been the mantra since the campaign last year. He wants pharmaceutical companies to make more drugs in the U.S. He wants automakers in Japan and Germany to make more cars in the U.S. So that is his driving motivation. He also needs to raise money to pay for this big tax cut and spending spending bill. He claims, and I believe Treasury Secretary Bessent said yesterday, that they're going to get $300 billion in new revenue this year from these tariffs. Now, you can make a case that is taking $300 billion from American importers who actually have to pay that tariff.
But does he worry about stocks? Do we know if he worries about bonds?
Clearly, he is motivated by, and he has made his trade decisions based on investor sentiment. And when it started going down sharply after April 2nd, those broad reciprocal tariffs, they changed course rather quickly, and the stock market rebounded. And he's in it. He's feeling pretty confident right now. He had the big legislative win last week. Stocks were at a record high at the end of the holiday shortened week, and he's feeling emboldened now. The problem he doesn't have any deals yet. We're watching for India. We're watching for the EU to come in, but he hasn't put one together yet.
I mean, talking about the EU, let's also bring in Richard Bravo. The president, Richard, told reporters that despite progress with the EU on a possible trade deal, he was basically frustrated over the bloc's taxes and fines targeting U.S. technology companies. And so suddenly he's talking about possibly unilaterally, declaring a new tariff rate in the next 2 days. How are the Europeans taking this?
Well, it seems the mood here in Brussels and in the 27 member states has changed somewhat dramatically over the past few days. And the reality of a U.S. offer that really does not seem fair in their eyes is becoming much more real. And this afternoon, ambassadors from the 27 member states will meet to discuss the latest offer from the U.S., which our sources tell us include a 10% base tariff rate for nearly all goods. The EU is pushing strongly to get a carve-out for certain key sectors, including aircrafts, medical devices, and a few other sectoral things are in the mix as well. One of the aspects that is causing some controversy in Europe is the issue of cars, and some car manufacturers have gone to the U.S. Outside of the regular negotiating framework and have pushed for a deal, an offsetting mechanism that would allow European manufacturers that have plants in the U.S. to be able to export cars, a certain number of cars, tariff-free to the U.S. Now, this would benefit mostly German car manufacturers, including BMW, Mercedes, Volkswagen, but French and Italian car makers typically don't have plants in the U.S., so they would not get this benefit. So we're really looking to see out of this meeting if the EU agrees to this offer, which they mostly agree is a very unfair deal, and whether or not that will lay the groundwork for Trump to accept that and get a preliminary agreement in the books.
Richard, it's also very nice. I mean, they're all like French flags here in London because of the state visit of Emmanuel Macron. I mean, it's been touted certainly from the UK side as, a breakthrough state visit to reset the relationship with the French. Possibly this is also a dig at Brexit. How important do you think this visit is?
I think it's very important insofar as what it indicates, and London and Paris and Brussels, they all understand that we're in a liminal moment for Europe right now. They're facing a complete change in U.S. policy to European security and defense. They're facing an ongoing war right on its border, and Russia seems to be getting increasingly aggressive, as well as this relationship with China, which also is not where the EU really wants it to be. So I think all parties understand that there really needs to be a strong relationship between France and the UK and the EU and the UK. And so Macron really is in London to take that message. We need to work together on security, on defense, on trade issues. And despite Brexit, the two really need to work together.
Thank you so much, Richard Bravo there from Brussels. Christian, I mean, when you look at, when you put all of this together, I don't know whether the world is possibly fragmenting or whether there's a pool of countries that are working together in certain parts of the world, and that kind of balances out the economy.
Yeah, I think this is a question, the big question that remains to be seen. At the moment, we are clearly fragmenting. And I think the big question is now, Europe probably would like to play this role as being the rule-based economy and keeping the rest together. I mean, it's often been said, the US is 50% of global trade. That's a lot, but it's still 15%. If the rest was to continue to trade under rules, let's say the WTO, so, that then could limit the impact. But, with China, EU frictions. We saw the BRICS over the last few days. They're also having their own agenda, if you want. So it unfortunately, it looks as if we could get really a fragmentation where this is all breaks further into blocks.
And we were talking actually about this yesterday, Brendan, the fact that we thought that maybe Donald Trump was going to try and really break Europe apart, but it seems they're holding strong. Are you surprised by, we're talking about retaliation, they seem pretty much on the same page for now and ready to talk with one voice?
Yeah, it's interesting that the European Union is what Donald Trump has described as the worst trading partner of them all, even worse than China, he has said. But here he is trying to, by all accounts that we have in Brussels, to try to put a trade deal together. I think the other thing that plays into what Christian was discussing is what's happening with Vietnam and those talks with Vietnam. Remember, the president announced on his social media platform that he had a deal with Vietnam. There has been no deal announced officially, and that really represents the pull that Vietnam feels between China and the U.S. China will not be happy with Vietnam if they enter some deal where they're sharing critical minerals and they're cooperating. So I think that really watching where that goes is really kind of key to the broader picture of the world fragmenting, dividing into two separate poles, BRICS, Western countries, trying to maintain their leadership role in the sort of broader world order.
Is that the same for Europe? And again, when you speak to a lot of chief executives, especially in certain industries like retail or food or health, the U.S. consumer is, the almighty U.S. consumer. It'd be very difficult, actually, for European companies to try and make up for that revenue elsewhere.
That will be difficult. By the way, Europe also has the issue now of the strong euro, right? If you see some of the earnings forecasts, with the strong euro, that has had an impact. But I think in Europe, at least, if anything has come from this, is this feeling that they have to pull this through together. The Europe is a whole. The EU is a large market. Germany now provide domestic, in a way, demand through the stimulus they're planning. I think defense is another issue. You mentioned France being in the UK. I think this idea that the UK will work together with the EU on improving their defense capabilities. I think these are strategic changes that will now have some room to go. And I think the European countries as well as the UK do look eye to eye.
Christian, we were in Sintra actually just last week, and I moderated the policy panel where you had all the big central bankers, and they were very, very reluctant to say anything, frankly, because of the uncertainty, I guess, because of the tariffs. I mean, does this automatically go into U.S. inflation like we've been expecting? There's been a delay in that it hasn't showed up in the data yet.
Yeah.
And same actually for growth. Yeah. Does this accelerate it, or is there still like a real lagging time?
There is a big discussion, and I think a lot of you, if you talk to the Fed, a lot of the presidents of the Fed, the president, for example, of the Cleveland Fed, she goes around and talks to, the car makers in Detroit, Cleveland, Pittsburgh is big for steel. And it seems the message is all that, companies are waiting. They want to have some clarity. They have inventories they have filled. And, and when the new car model comes out, maybe then increase prices. It looks very difficult to believe that all that is going on and all these cost increases will end up not driving CPI. And I think this is where, at the moment, there's a certain complacency. Even consumers who are very concerned in the U.S., if you look at the expectations have been coming down now because they don't see the price increases, so they somehow seem to believe they may not be coming. But, U.S. economy is still growing relatively well. There is demand. Yeah. China and others cannot eat, so to say, these cost increases in their margins. So we feel quite comfortable in a way, or certain that we will see these CPI increases in the coming month.
Are you expecting the Fed to cut this year? And again, Donald Trump every day attacks Jay Powell.
Yeah.
And I don't know whether that gives him just more maneuver to do everything he wants on tariffs.
I mean, Jay Powell certainly got standing ovations in Sintra, right? Seeing as an independent central banker holding the fort, if you want. We see one cut in the end of the year, when we believe there will be some visibility for the Fed that actually the worst of the price increase is over, and then they're they're seeing that they're starting to cool. But until then, we actually don't see a cut. We never saw it for July, and we also don't see it for September.
Brendan, we're talking a lot about some of the U.S. trade at country level, but if you break down the sectors, so pharmaceuticals, critical minerals, semiconductors, copper, timber, is there anything that will be very difficult for the U.S. to tax because the consumer will be up in arms?
Yeah, I mean, look, this is the real challenge facing the Trump administration because all of these tariffs are piling up. The economic data that we're seeing that doesn't reflect I think there's a lot of noise in there with front loading and that kind of thing. So I think we will see the president roll out more of these sectoral tariffs in the weeks and months ahead. Remember, there's a court challenge to the broader reciprocal tariffs, and those may go away. So he's got these other tools in his toolkit to try to accomplish what he wants, build this tariff wall around the U.S. economy, drive production back home. But in the meantime, there are going to be price pressures to deal with.
Yeah, it seems it needs to be very well calibrated. I heard tequila was exempt, but I'm not sure if it's true. I haven't checked it out. It was actually a drinks maker CEO that told me. Christian Keller, head of economics research at Barclays, and Brendan Murray, our trade czar. Now, coming up, Bloomberg learns that SpaceX is looking to raise funds at $400 billion, the largest ever valuation for a privately held U.S. company. More on our Bloomberg scoop next, and this is Bloomberg. Hi, everyone. Now, UniCredit has increased its equity stake in Commerzbank, becoming its largest shareholder after converting derivatives into stock. Now, the move gives Milan-based lender about 20% of the effective voting rights of its German rival. Let's bring in Tom Metcalf, our EMEA finance and investing editor. Tom, I mean, so good to speak to you. I mean, this is like the story that keeps on going and going, but it seems like Andrea Rocelli is absolutely not backing down. What's your take on it?
Yeah, I think that's right. I think it's just a sign that, look, he is still definitely interested in a potential takeover of Commerzbank. And, obviously now he has a 20% equity stake, and that will rise to 29%. Look, he's telegraphed he was always going to convert those derivatives into, like, a full-fat shareholding, as it were. What that gives him is, it makes him a little bit more of a stable, sort of longer-term, in view at least, Commerzbank shareholder. And as you say, it really just shows that, look, he is not planning on turning around anytime soon, backing away. He's previously said, look, I'm going to make a decision as late as 2027 on whether to actually pursue a takeover. And this, I think, just shows that, whatever the political kind of opposition in Germany, Commerzbank's not happy about this. Whatever's happening there, he's still kind of intrigued and still kind of out there looking.
Yeah, I was going to ask, how's Commerzbank reacting to this? Well,
I loved in their statement, they said, once again, we were not informed about this move. And so it is interesting that they're definitely kind of, at loggerheads at the moment. But, any bank, or any firm, any company can't ignore a 29% shareholder, which is what UniCredit is going to move towards in the coming weeks. So it'll be interesting to see how both sides manage that, right? Like, they all want friendly relationships as much as possible. But it's such a fascinating dynamic and obviously long running. Like, we've been talking about this for so many months now, and it's just every stage it gets more and more interesting.
Yeah, and it's interesting also the operation, right? The way it was done, because they converted some things to get into the stock. Okay, Tom, lay out the landscape for European banking M&A.
Well, it's hurting my brain, I would say. So there is just so much going on. So any day I might be looking at Spain, Italy, obviously today. Even in France, there's plenty of kind of consolidation chatter. And here in the UK, you just see TSB bought. I mean, I think the big question is all this M&A momentum and chatter in finance, will it sort of result in a seismic change or any kind of genuine sort of shift in the dynamics? And right now, as you look at the various political pushback, I would say my optimism that maybe this time would be different is maybe fading. But, all it takes is one big deal to unlock things or change things. So right now in Italy, we're watching, what will the Italian court say about UniCredit BPM? Might that kind of change the dynamic in other deals, for instance? And then, of course, as we've just been talking about, if, say, UniCredit could find a way to do the Commerzbank deal, that would be a massive change and really kind of probably change the landscape of European banking.
Tom, thank you so much to you and team. I know it's terrific work and just relentless. Tom Metcalf, our EMEA Finance and Investing Editor. Now, Bloomberg also understands that SpaceX is in talks to raise new funding in a deal that could value the company at around $400 billion, the largest ever valuation for a privately held U.S. firm. Well, we're joined by Benedict Kamel, who leads our global space and aviation coverage based in Berlin. Benny, good morning. So how far along are these talks, and what's actually driving a valuation that's this high?
So these talks are now underway, as we understand from people familiar. It's a two-way process or a two-step process. First, there's a funding round for investors, and then there's a secondary round for employees and early investors, and the price of the shares that are being offered sort of determine each other. So if the first round goes well, then more will be raised in the second round, and then we could get to that $400 billion valuation. That's about $50 billion more than previously it was $350 billion, now it's $400 billion. So that's quite a step up from only half a year ago, and that gives you a sense of just how valuable this company has become. They are really a force in the space market. They are really the only game in town when it comes to these very regular, reusable rockets, and that's really what's driving the valuation.
So, Benny, how is Elon Musk's feud with President Trump factoring into the broader narrative of Musk's companies?
Well, Elon Musk is obviously sort of the mercurial leader of this and other companies, and then a lot of people buy into the Elon Musk story, and that story has become somewhat multifaceted, shall we say, over the past 6 months. He still drives the Tesla story and the SpaceX story, but we've seen the rift really that's built up between him and Donald Trump, and SpaceX in particular, and the business of space depends in no small degree on sort of good relations with the government. There's the regulatory side, there's the funding side. So all of these things really depend on how that rift, how that break between these two people will play out going forward. Also, how much time will Elon Musk have to really focus back on this? This is something we've heard from investors a lot, that he should remove himself from politics and really focus far more on running his businesses again, be it Tesla, be it his tunnel boring company, be it SpaceX. But now he's in the process of considering a third party. So the question really is, where will his eye be? Will it be on the companies? Will it be on politics? And that's something that will determine how people view this.
Benny, thanks so much. Benedict Kamel there with the very latest on SpaceX. Coming up, as OPEC Plus increases production in a dash to grab a bigger market share of the market, we'll be in Vienna for the OPEC seminar. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Donald Trump ramps up his trade war, threatening 200% tariffs on pharmaceuticals and 50% on copper, while warning there'll be no further extensions. EU negotiators focus on protecting key industries from Trump's tariffs, seeking exemptions for commercial aircraft and some car makers. Plus, UniCredit scales up its consolidation plans, boosting its equity stake in Commerzbank to about 20%. Now, oil prices holding steady as traders weighing signs of swelling U.S. crude stockpiles and the fallout from President Trump's tariff regime. It comes after OPEC Plus ramped up output over the weekend in a battle for global market share. Well, let's go straight to Vienna, where the OPEC seminar is taking place. Our Jumana Bersecci is there with the guest. Hi, Jumana.
Hi, Francine. Yeah, so the OPEC seminar is taking place actually right behind me in this Hofburg Palace. You can see that there aren't that many cars because it has just kicked off. And this is a seminar that takes place every 2 years, put together, organized by OPEC. It is a meeting of minds, some of the biggest names in the energy industry coming here, including CEOs of some of those large energy companies as well. Now, we are outside because Bloomberg News have not received this accreditation despite multiple requests. That being said, we are continuing the conversations, and I'm very happy to say that Layton, the global head of commodities from Citi, joins me right now. Really good to have you with us. Look, this is the first opportunity for people in the industry, in the oil industry, to come together and sort of take stock of what has happened in the oil markets over the last couple of weeks. Coming off the big geopolitical scare around Iran, Israel, and then, of course, the OPEC Plus decision over the weekend. And that you look at where Brent is trading, we're still just shy of $70. All of those shocks seem to have been taken in stride.
That's true. Yeah, it's a great privilege to be here, and I want to thank the OPEC organisers for having me here, and thanks for having me on the show. Oil price has been grinding down for the last 12 months or so, and it was somewhat of a surprise that OPEC decided to bring back the barrels around 3 to 4 months ago. We've already seen 700,000 barrels a day return to the market over the last 3 months, and we've got at least, it looks like, another 1 million barrels to be returned by OPEC plus 8 over the next 3 months. Mm-hmm. So the baseline view from our side of, and it does seem to be consensus. We'll see what consensus is here over the next couple of days, but certainly seems to be consensus that the oil price has a little bit more downside over the next 3 months.
Yeah, but the oil market did also, the industry thought that was going to.
All right, I think we're having a couple of quirks when it comes to Jumana's line there, so we'll try and reestablish connection. These things sometimes happen, so we'll get back to Jumana Bercecci at the OPEC seminar in Vienna. Let's also now talk there's a couple of things that we want to do. First of all, why don't we look at the markets, because always look too good at the markets, especially with everything that's happening with copper and these aggressive trading regimes from Donald Trump unleashing turmoil really in copper markets with a 50% tariff plan. So again, the stocks waiver on tariffs seems to be also threatening LME copper. That's falling. A couple of other things we're watching out for is, of course, euro, dollar, and then treasuries. All right, I'm told the line is fixed. Let's get back to Jumana in Vienna. Hi, Ju.
Francine, yes, thank you so much. Well, I was just saying that it seems the case that the market was actually able to digest all of these extra barrels that OPEC Plus brought back to the market over the last couple of months. So they were actually vindicated to a certain extent in bringing them back.
Yeah, it's been remarkable how the market has absorbed those barrels, at least so far. And, we're seeing backwardation still in the market. Product cracks are strong. There's a lot of indicators that suggest that demand is better than expected, especially considering the tariffs and the concerns about global growth that they've raised over the last few months. Yeah. So, yeah, it has been, in hindsight, a good time to return the barrels to the market.
Do you expect that to continue, though, these good times?
Certainly for the next 3 months or so. I think beyond, and even into next year, certainly our price forecasts are much higher than from what I can tell, consensus is. So a lot of people have been talking about $50 Brent, even $40 Brent. It's been thrown out there over the last few months. We've kind of always stuck to the low 60s as being the medium-term equilibrium price for oil, where you kind of get shale production coming down or being broadly flat, and you have some room for OPEC to bring back the barrels, and this is kind of the right number. So within a $50 to $70 range, over time we think that 60 to 65 mark is the equilibrium.
Since you mentioned shale, what do you see as the outlook for U.S. shale production in the coming year?
Sure. In the coming year, it's highly price dependent. At these prices, we'd expect flat shale production into next year. But certainly if we get down to our forecast, we're looking at a small decline in shale production, and that's going to result in a pretty interesting situation with President Trump, whether or not he's okay with that given the energy dominance push by his administration. So that's part of the reason why we don't think we go sub 60 for too long, is because falling shale output's maybe not the best look. And so you could expect SPR builds, you could expect the potential for OPEC to change strategy sub 60.
Yeah, and SPR builds coming from the U.S. is also a big one as well. Now, look, you mentioned some of the macro uncertainty, tariffs obviously super top of mind as well. You're global head of commodities. I've got to ask you about the latest announcement overnight that the Trump administration is looking to apply tariffs of up to 50% on copper in the next few weeks. Number one, is this a game changer? Is it a surprise? How do you see copper markets from here?
Yeah, so kind of counterintuitively, this announcement is actually going to be very bearish for LME copper in the near term. So we've seen overnight copper's come down. We had one of the biggest shifts of metal, biggest kind of tightening in the ex-US markets that we've ever seen really over the last couple of months as traders got ahead of the tariffs. They shipped all the copper they could find ex-US into the US. And so now the certainty coming down over the next 3 or 4 weeks is going to result in that metal being freed back up to the market. And kind of counterintuitively, LME will go down and CME copper will trade up perhaps 35-40% higher than LME.
Even higher than where it is right now then?
Around where it is now.
Okay.
Yeah.
And then also, speaking of metals, you also have an anti-consensus call here. You see gold topping out. I've got to say, most people I speak to in the market still see upside for the precious metal. Why are you turning negative?
Sure, yeah. So the structural case for gold is still very bullish. U.S. deficits, central bank buying, all of that good stuff for gold still there. But there's a cyclical element which is related to U.S. growth concerns. And so President Trump into the midterms, we think, is going to really push to accelerate U.S. growth or to have as strong as possible U.S. growth. So once we get through the tariffs over the next couple of months and they feed through to the data, the policy push with the One Big Beautiful Bill Act, very targeted on 2026 growth actually, and with potential Fed cuts, we think growth sentiment will improve in 2026 and you'll get that cyclical element, which is worth about $600-700 on the gold price, come out of the market in 2026.
So what's the target?
2,600.
All right, good place to leave it. Max Layton, Global Head of Commodities at Citi, joining us to discuss all things related to OPEC, oil, and of course, those copper tariffs and gold. Francine, back to you.
Yeah, there's quite a lot going on with metals this morning. Jumana, thank you. Jumana Versace at the OPEC seminar in Vienna. Now, the French President Emmanuel Macron has warned that Europe faces hesitating alliances during a speech to the British Parliament. Now, Macron, on his first state visit to the UK, also pushed for closer ties between Paris and London, calling for an end to excessive dependencies on both the US and China.
At this bilateral summit, we will enter a new stage that will scale up this cooperation. And we are faced with new threats, with aggressive nuclear powers, with sometimes hesitating alliances, and the return of major conflict on our continent. There is an expectation in Europe that, faced with revisionist neighbors, our two countries have a special responsibility for the security of the continent. And it is time to articulate it.
Well, we're now joined by Bloomberg's Alex Morgan. I have to say, he gave a number of speeches. Some of them were also quite funny, with like slight digs at the monarchy, but he kept it polite. What's the significance, in general, of these comments actually on the rapprochement between London and Paris, and what's on his agenda today?
Yeah, I think the comment you might be referencing there, Francine, is when he said, "We love monarchy, just not at home." I mean, it was a sort of a sense of a sprinkle of humour in a speech which otherwise had some pretty broad and hard-hitting themes. If you like what we've had from the French president so far in his address to Parliament yesterday, and also in remarks he made at a state banquet alongside the King, was, I suppose you could say, sort of a road map of where the talks will now go this afternoon with the Prime Minister Keir Starmer, and then at the Franco-British Summit tomorrow, and a meeting as well of this so-called coalition of the willing. What we're yet to see, though, are the really thorny issues being hammered out, being discussed. Announcements say on migration. We know that that is the issue. That is the channel between the two countries. And it is the issue of the channel, which is in the UK, a particularly hot-button political issue with irregular migration across that channel hitting record highs, putting pressure on the UK government. We know they want to reach a new arrangement with the French for returns, as yet to see anything inked on that. Security and defence. You heard there Emmanuel Macron talking about the need for Europe, for the UK and France particularly, to lead the defence of the continent. The shadow, of course, being cast across these meetings is that of the conflict in Ukraine. Emmanuel Macron yesterday saying to UK lawmakers, Europe will never, ever abandon Ukraine. And then you've got growth and investment. Macron also talking about the importance of this sort of rapprochement, as you were saying, this thawing of relations after Brexit. This is the first state visit from an EU leader since Brexit. And Emmanuel Macron talking about how the alliance has grown stronger in that time, talking up the number of companies, of course, French companies in the UK, UK companies in France, but also the cultural ties. And we saw that as part of the pact that was discussed between the UK and the EU, the importance of both the economic and the cultural ties. So the mood music from the president in his remark is, I suppose you could say, big challenges, broad picture. What we're now looking for is the pomp and the ceremony starts to sort of be put to one side and we get to the nitty-gritty of the meetings. There's any details on whether we will see concrete plans, concrete announcements coming out. We'll be hearing from Macron and Starmer at a joint press conference tomorrow.
Alex, thank you so much. Alex Morgan there was the very latest on the state visit, which is quite exciting. I mean, you come into work and you see the French flags and the UK flags, and it gives it a little something. Now, President Trump has again expressed his displeasure with Vladimir Putin over the war in Ukraine as he confirmed plans to send more defensive weapons to Kyiv. Trump said he's looking at a bill that would impose severe sanctions on Russia.
That was a war that should have never happened, and a lot of people are dying. And it should end. And I don't know. We get a lot of thrown at us by Putin for you want to know the truth. He's very nice all the time, but it turns out to be meaningless.
Well, as President Trump mulls more sanctions on Russia, a reset in U.S. relations with Moscow in the near future appears less likely. Now, this also means that international corporates that left the country will not return anytime soon. It gives local copycat brands more time to prepare to defend their position in the Russian market should their Western inspirations ever decide to come back. Well, joining us now for more on the story is Eleanor Thornburg. Eleanor, I mean, I loved this story. It was interesting because actually there was a lot of things that we don't think about, these copycats, like, the McDonald's copycat. So first of all, what do we know about these Western companies that are trying to replicate what the Western has?
Yeah, I mean, it's interesting. It's difficult to say if they will want to come back, as you say, given the current context. But, I mean, I would be surprised if there weren't conversations being had somewhere behind closed doors maybe about wanting to come back to Russia because, for a lot of these companies, Russia was a really important part of where their money came from. I mean, if you look at McDonald's as an example, they first came to Russia in 1990 and they were met with, extreme enthusiasm. I mean, people queued up for hours to get their first ever Big Mac. And in many ways, that enthusiasm never really left. I mean, cut to 2021. And like 9% of McDonald's global revenue came from Russia. And that's not a small amount. That's a pretty important amount of money. So I think the path to re-entry is quite difficult. It certainly looks quite long. It looks uncertain. But as I say, I think I would be surprised if these companies weren't eyeing it in any capacity at all.
And so we have basically these companies that we considered, Russian replacements, that tried to cater for the same palette or kind of, take up space because these Western companies left. What are they doing to try and fend off competition?
Yeah, I mean, some of them have been really successful doing it. So, I mean, it's not a rosy picture across the board. There have been winners and losers. But, I mean, if you look at the replacement of McDonald's, which is called Vkusnaya Tochka, and that literally translates to tasty and that's it, which is quite a defiant message even of itself. And they're doing really well. I mean, if you look at the numbers, they had a pretty severe loss in 2022, but they bounced back by 2024. They had a pretty hefty profit. They now open 50 new stores every year. They've actually surpassed the amount of stores that McDonald's once had. They serve 2 million people every day. Those are hardly figures of a company that is struggling. But I mean, even if you look at the ones that aren't maybe doing quite as well, you can look at Stars Coffee, which replaced Starbucks. They haven't opened as many stores, for example, but they are being very strategic about where they open in Russia. They are opening further into the more eastern areas, more remote cities and towns, so that the people that live there only know Stars Coffee. They don't know anything else. So even if they're not doing as better, maybe or as good as they hoped, they are certainly sharing this attitude of we are digging in our heels and we will do whatever it takes to stay and we will fight for our territory if we really have to, should their Western inspirations ever come back.
Eleanor, thank you so much. Really terrific story. I urge everyone to go and check it out on our website. We'll also push it out on social media. Eleanor Thornburg. Now, making news as well, Bloomberg understands that Meta has bought a minority stake in the world's largest eyewear maker as it deepens its commitment to smart glasses. Sources say Meta has taken a 3% stake in EssilorLuxottica, worth around 3 billion euros. Now, the two companies have already partnered over the years to develop AI-powered smart glasses. And longtime Apple Chief Operating Officer Jeff Williams is stepping down later this month, marking a major change of the guard for the iPhone maker. The company says he will hand his post to Deputy Sabi Khan before retiring from the company later this year. Bloomberg has also learned that the French startup Mistral AI is in talks to raise as much as $1 billion in equity from investors, including Abu Dhabi fund MGX. Now, we're told that the artificial intelligence firm is also in talks for hundreds of millions of euros in debt from French lenders. Mistral is Europe's biggest AI startup and has raised more than €1 billion since its founding in 2023. Coming up, how close is the EU to making a deal on tariffs with the US? Our interview with the Irish Finance Minister and Eurogroup President Pascal Donohoe. That's next, and this is Bloomberg. back, everyone. Now, there's a lot going on in the markets. President Donald Trump announcing a 50% tariff on copper imports, causing a record spike in New York futures and a drop in the global benchmark. Now, this is a picture across the board. When you look at European stocks, they're still holding high. The CAC 40 gaining some 0.7%. The DAX also 0.7% higher. But again, some of the plans that we were thinking on Monday could be looked through. Certainly some of the letters that President Trump and administration sent now seems to be coming back. Now, I have to say the plan, certainly when it comes to the metal markets, was apparently in an off-the-cuff comment to reporters, but it marks its latest twist in a very tumultuous period for industrial commodities. So let's bring those up if we can, and also look at some of the U.S. futures. The U.S. president aims to encourage more mining and smelting at home. Now, the implications of this could be higher inflation. We also know that the president has already raised fees on steel and aluminium imports, while probes into flows of multiple other metals are in train. So look out for anything on that front. The other thing that took many by surprise is his stance on the European Union. Now, remember, on Monday, traders had largely brushed off the batch of letters in which Trump effectively delayed a lot of his tariffs deadline with, outlining new rates targeting over a dozen countries. Now that's coming back, and a lot of the companies here in Europe also have to contend with Eurodollar that's elevated. We had some really good conversation in Sintra last week looking at Eurodollar at 120 and the broader term implication for that. So investors will also parse minutes from the Fed's June policy meeting later today for indications on whether officials are close to lowering interest rates. But this is a conundrum. If you're a central banker, do you say, well, look, we actually don't know tariffs and a lot of uncertainty on trade, so am I okay to lower interest rates now? And do I really get hurt if inflation comes back up, or do I just wait and see to see exactly what happens? Now, there's also what we, follow very closely is the president really attacking constantly the Fed chair, Jay Powell. I think it was only a couple of days ago where he accused Jay Powell of whining like a baby about non-existent inflation as he intensified the standoff over the policy and rate cuts. Again, any uncertainty in trade could change. Now, Bloomberg has also learned that the European Commission is closing in on, of course, this U.S. trade negotiation. So this is what we know so far, that the trade deal could exempt commercial aircraft from some tariffs. It could also create carve-out for some mostly German car makers and drink companies. So I could not be more pleased to speak to Pascal Donohoe, Ireland's finance minister and president of Eurogroup. Thank you, Minister, for joining us. Congratulations on your re-election as president of the Eurogroup. What is your first priority now?
I would identify two priorities that are quite immediate for us. The first one is how we continue to get the balance right on budget policy, investing in our future while keeping our collective public finances safe. And secondly, the more immediate priority too of how we can accelerate progress with regard to the digital euro. In addition to all of that, projects such investment and savings union and how we strengthen our banking union will continue to be big areas of focus for the Eurogroup and for me.
Minister, there's so much tariff turmoil, and we understand that President Trump is open to negotiations, but certainly the rhetoric has been ratcheting up. How likely do you think the EU remains at 10% tariffs? And actually, how likely do you think that some key areas for the Irish economy, including aircraft, will be exempt?
So it's difficult to assess that at the moment, but that is our priority. Our priority is to lessen the impact of tariffs both on the Irish economy and on the economy of the European Union. And we remain very committed to that negotiation agenda in the days and weeks ahead. It is to be welcomed that the negotiation window is being extended, as opposed to having to confront a more escalatory set of measures on both sides of the Atlantic. And what we now need to do is use the weeks that are ahead of us to see can we create that environment. Our priority is, as I said, to avoid the impact of general tariffs on our economy, though we accept this is an important issue for the agenda of the US. And secondly, with regard to particular sectors within our economy, to look at how they can be supported. And we have full confidence in the work of Maroš Šefčovič, our Trade Commissioner, in representing the EU on this agenda.
Minister, even a baseline tariff of 10%, which could look pretty good given all of the uncertainty, will have an impact on Ireland's finances, but finances in Europe. What does this mean for example, Ireland's next budget, but European budgets in general?
So from an Irish perspective, if 10% tariffs were to become a normal feature of our trading environment, it means that our economy will grow at a slower pace. It means our public finances will still be healthy, but a bit less so. And it means that we will see a continued high level of employment within our economy. But we estimate between 50 to 75,000 fewer jobs being created across a 3 to 5 year window. So that broadly is where Ireland stands. It's one still of growth, but of lower growth than we would have in the absence of those tariffs. And I think that broadly applies for the rest of the European Union overall. If I look at where we are at the moment, I expect the euro area to grow by around 1% this year, by more than 1% next year, and we will still have record levels of employment within our economies. We would prefer to and want to grow at a faster pace, but it's regrettably the case that the trade uncertainty that we're in at the moment is having an effect, which is why concluding these negotiations in a mutually beneficial and agreeable way is so important.
As Eurogroup president, you of course also pledged to progress on capital markets and banking union. What do you think needs to be done today to get it done quickly, and what kind of timeline are you looking at?
So the agreement in relation to the new securitization initiative that has been brought forward by the European Commission, which was discussed yesterday by all 27 finance ministers when we met in Brussels, is an excellent example of the action that we can take quickly. And what I am hoping for is a quick agreement to that initiative in the second half of this year under the Danish presidency, and the implementation of that initiative shortly afterwards. That is demanding, but it's a real litmus test for what we should be able to achieve with regard to capital markets union. With regard to banking union, in the last number of weeks, a further agreement was reached in relation to a crisis management framework within the European Union for small and medium-sized banks. Governments at the moment are considering the implementation of that agreement, and that's another very practical and timely example of the progress that we can make.
Minister, always such a pleasure to speak to you. That's, of course, Pascal Donohoe, Irish Finance Minister and President of the Eurogroup. Up next, Bloomberg Brief.